The future is global, green and digital. Luxembourg is ready for it. By 2025, Luxembourg's ambition is to finance a sustainable future, putting qualitative growth, innovation and stability at its core. Now, more than ever, financial services are essential to economic recovery. For decades, Luxembourg's multi-jurisdictional expertise has helped connect global investors with firms and projects in need of financing anywhere in the world. Located at the heart of Europe, Luxembourg will further expand its role as an EU hub for companies, thereby supporting a stronger European economy, job creation and qualitative growth at home and in the EU. At the forefront of green finance for several years, Luxembourg has not only embraced the global trend towards sustainable finance, but has taken on a leading role. We will continue to strengthen our position as a key hub for impact investment and blended finance. Drawing on a long history of innovation, Luxembourg is committed to fostering new ideas and companies by providing a rich, supportive environment for today's fintech pioneers. It is leading the way for the future of finance. A stable country with a strong economy, Luxembourg is committed to ensure compliance with international standards and continues to provide international investors with the highest possible standards of protection. Our unique pool of multilingual and highly skilled talent provides the key to unlock Europe's large and diverse single market. Luxembourg will support the continuous expansion of its financial industry, and in doing so, is steadily building a first-class financial services industry that benefits Europe and the world. We're financing a sustainable future.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Ladies and gentlemen, dear guests, welcome to our live stream Focus on Canada. My name is Philipp von Restorff, Deputy CEO of Luxembourg for Finance and today's Master of Ceremony. Canada and Luxembourg have had strong bilateral relations for a long time now. Our long-standing friendship has resulted in a steady economic and trade partnership. Both our countries share, in fact, many similarities: multilingualism, liberal economies, international focus on trade, and in many ways, we share the same global outlook. As signatories of the Paris Agreement on climate change, Canada and Luxembourg are committed to a sustainable finance and as a strategic priority and critical element for future growth. Both our countries have important financial centers, acting as hubs to their local regions. Luxembourg is very proud to be home to a number of major Canadian financial institutions. We would like to continue to grow the relations between Canada and Luxembourg. With this particular live stream, we intend to strengthen these existing relations and hope to build new ones by providing you today with an overview of the recent and future development in Luxembourg and Europe regarding financial services in general, sustainable finance as well as fintech, currently the main drivers in the industry in particular. Before kicking off the session, I have the honor to introduce to you Shauneen Bruder, the Honorary Consul for Luxembourg in Toronto. Shauneen is also a corporate director, chair of the Board of Governors for the University of Guelph, member of the Institute of Corporate Directors. Previously, she was appointed as the chair of the Canadian Chamber of Commerce and the Canadian American Business Council. Until her retirement, she was executive vice president and head of operations at RBC Financial Group. She holds a Bachelor of Arts from the University of Guelph, was gold medalist of the Queen's University MBA, recipient of the Queen's Diamond Jubilee Medal, and in 2016 was inducted into the top 100 Women's Executive Network. Shauneen, the floor is yours.
Thank you, Philipp, for that kind introduction. I'm very pleased to provide some words of welcome as the Consul of Luxembourg in Toronto. As you've heard, our agenda today showcases Luxembourg and its highly strategic position within the European market and its many strengths and innovations as an ideal European hub for global financial institutions. Whether it's global funds, international banking, cross-border insurance, sustainable finance, fintech, or international capital markets, Luxembourg offers a diverse range of financial services and is home to many Canadian operations. The many similarities between Canada and Luxembourg are a big factor in the strong and historic ties between our two countries. Like Canada, Luxembourg is a relatively small country with historic openness to larger markets due to its geography and size. Both countries have depended on open borders and an international focus for their strong and growing economies. And both countries have a profound respect for international institutions, with Luxembourg a founding member of the European Union, Benelux, the Council of Europe, NATO, the OECD, the United Nations, and the World Trade Organization. Both countries have exceptional language capabilities. Of course, Canada is bilingual, and Luxembourg is a multilingual country with English widely spoken alongside Luxembourgish, French, and German. Both countries benefit from a highly skilled multilingual workforce. Political systems in both countries are stable, and sophisticated business, infrastructure, and courts provide a strong and stable environment for business. And of course, financial services are a cornerstone of both countries. Toronto is the second largest financial center in North America and the seventh largest globally by employment. The city's financial service sector continues to grow and has a significant influence on the local economy. In fact, Toronto has the highest concentration of financial services employment in North America. Only Luxembourg and Singapore have higher concentrations of financial services employment and expertise. Luxembourg is widely known as an international financial center, playing a sophisticated and key role in the global financial system. It has a leading share as an investment fund center, a wealth management center, in fact, is sixth largest in the world for private banking, and in captive reinsurance. Most Canadian financial services companies already leverage Luxembourg's strength in these areas. The Luxembourg government has been very strategic in emphasizing emerging and innovative sectors and technologies, and many of these you will hear spotlighted today. Sustainable finance and fintech in particular are areas of shared and growing interest for both economies. Fintech is a tremendous opportunity for the Canadian financial industry as the sector digitally transforms. Luxembourg's innovative financial infrastructure, forward-thinking regulators, and a vibrant startup ecosystem have transformed the country into a real marketplace for the hosting of systems, applications, and platforms. Over the past several decades, Luxembourg has been actively attracting talent, fostering innovation, and providing stability and openness to change to thousands of experienced financial services professionals from across the globe. This infrastructure is a unique asset. Now, I'd like to end with a few words on how it feels to do business in Luxembourg, given this environment. In my experience, over a 35-year career in banking, I have come to value Luxembourg's forward-thinking, pro-business policies. The depth and expertise of the workforce in financial services is very apparent. The government strives to be competitive and to deliver a streamlined administrative environment. On more than one occasion, I have been struck with the agility and creativity to solve business problems in a timely and professional manner. And I continue to be struck by the similarities of our two countries, our shared global outlook, and our shared commitment to continual innovation and growth. I know you will enjoy this session. Now I'm pleased to turn the agenda back to Philipp.
Thank you very much, Shauneen Bruder, Honorary Consul of Luxembourg in Toronto. It was mentioned, sustainability and sustainable finance is the future. Now, what is the state of play of sustainable finance in Europe? Denise Voss will provide us with an overview of what is going on in Europe in this so important field, becoming progressively the mainstream in global finance. Denise is a non-executive director of financial services companies and serves as a director on the boards of flagship funds of major fund promoters. Denise worked in the financial industry in Luxembourg since 1990. She retired from her position of conducting officer at Franklin Templeton in March of this year. Currently, she is the chairwoman of LuxFLAG, an independent agency created to support the financing of sustainable development by providing clarity to investors through awarding internationally recognized labels to eligible investment vehicles. Denise is also chairman of the IFAMA Investor Education Platform, and she was chairwoman of the Association of the Luxembourg Fund Industry from 2015 to 2019. She holds a CPI license and obtained a bachelor's degree from Tufts University, as well as a master's degree in accountancy from Bentley University. Denise, after a short introductory clip, the floor will be yours.
Thank you, Philipp. Thank you very much. I'm very pleased to be with you here today from Luxembourg and speaking on behalf of Luxembourg for Finance. So the definition of sustainability, I'm sure many of you know that this is the idea that today's society can meet its needs without compromising the needs of future generations. The Sustainable Development Goals, the 17 SDGs, were adopted by all United Nations members in 2015. And this is really a blueprint for sustainable development today. The foundation of the SDGs include climate action and other environmental factors. Many SDGs, though, focus on society, zero hunger, and on the economy, decent work, and economic growth. The SDGs are at the forefront of international development conversations and initiatives in Europe, in Canada, and increasingly around the globe. Financing the SDGs and initiatives like the Paris Climate Agreement require financing to the tune of several $trillion each year. And governments, of course, can't free up that kind of money, especially during this time of COVID-19. So we really need private investors to finance the infrastructure and projects to meet these goals. And by the private sector, of course, I mean institutional investors, so pension funds, banks, insurance companies, but also more and more we rely on retail investors to invest in these projects through investment funds, banking and insurance projects, as well as company shares. And don't forget, this is not just about making the world a cleaner and better place to live. This is a tremendous opportunity. The UN believes that achieving the SDGs could open up $12 trillion of market opportunities and create 380 million jobs globally by 2030. So that's a huge opportunity. And this, of course, is where sustainable finance comes in. Sustainable finance takes into account environmental, social, and governance, ESG considerations when analyzing investments and when making investment decisions. This will help with sustainable development and lead to increased long-term investments into sustainable economic activities and projects. What is striking about sustainable finance is that it's holistic. It's a holistic approach to investing. So when deciding which companies to invest in, investors and financial professionals will look at all aspects of a company, from today to the future anticipated aspects, looking at financial and non-financial elements of the businesses that they may want to invest in. The 2018 report from the Global Sustainable Investment Alliance highlights that globally, sustainable investing assets reached nearly $31 trillion at the start of 2018. So that was a while ago, but still. And that was a more than 30% increase over 2 years. A more recent report notes that the value of global assets that are applying ESG data to drive investment decisions has risen to over $40 trillion in 2020. And while these studies use different methodologies and can't necessarily be 100% comparable, the important message is that sustainable finance assets are growing enormously and significantly and will continue to do so, we believe. So again, a clear increase in sustainable ESG financial products, really due in large part to investor demand. Traditionally coming from institutional investors such as pension funds, but retail investors are increasingly seeking investments that are sustainable. And this is actually a change, and it's interesting. I've heard recently complaints, if you will, from retail investors who have hard times actually finding investment products, sustainable investment products to invest in. There's no platform, or they don't know where to look. And I just wanted to actually salute the Responsible Investment Association in Canada for creating the responsible investing marketplace for investors and advisors, including information about where to find investment products that are sustainable. So I hope we see something soon in Europe to that effect. Sustainable finance has been mainly about climate change, but COVID has actually changed that, and now we are focusing much more on the S in ESG, the social issues. Some say, I would say actually that COVID-19 has lifted the lid on many social issues that the general public and policymakers didn't necessarily pay that much attention to. So things like access to healthcare, inequality, unfair labor practices. Now, some say there's a risk that COVID-19 will slow down the process of sustainable finance, but there are just as many who believe it will be an accelerator. Investors, I think, have recognized this and invested a record $71 trillion. Excuse me, I wish it was trillion, $71 billion US dollars globally into sustainable investment funds in the second quarter of 2020, and we believe that will continue. So more investors are demanding that their investments are green or focus on social issues. Particularly, this is important for the younger generation, but I would beg to differ that it's actually also important for my generation and the older generations. And it's a trend I believe we'll continue to see. So in Europe, European policymakers are playing a leading role, pushing forward sustainable finance and pulling the public and the industry quickly along the sustainable finance journey. The new Green Deal, which is one of the centerpieces of the priorities and the policy of the European Commission, is actually a very important point and something I would like to mention. It is an ambition for Europe to be the first climate neutral continent by 2050. This may seem to be only focusing on climate, but the aim is actually also to decouple economic growth from resource use and to ensure that no person or no place is left behind. So this is about making opportunities from environmental challenges and ensuring that the transition is just and inclusive for all. So these are all very lofty goals and require substantial financial resources, as I mentioned. But we also need to recognize that with increasing focus on sustainable finance, there's an increased risk of greenwashing or social washing, if you will. Labeling, certification is one solution to avoid greenwashing. And greenwashing is, of course, saying that something is green, but it isn't actually very green. So the EU, though, is focusing on reporting and providing transparency to investors as a means of combating greenwashing. So the EU has set out a framework for sustainability called the EU Action Plan for Sustainable Finance. And this actually, of course, is to support the EU Green Deal, the Paris Climate Agreement, and the UN SDGs. There are two main pieces of regulation coming out of the action plan that I'd like to briefly touch upon. One is the EU Taxonomy for Sustainable Activities, and the other is the Sustainable Finance Disclosure Regulation. So the EU Taxonomy is a classification system. It's a dictionary, and it details what is green. The sections completed so far are what is to be considered climate adaptation and what is to be considered climate mitigation. Ultimately, investment products will have to state whether they are aligned or not aligned with the EU taxonomy. And if an investment fund, for instance, calls itself green, it will have to respect, of course, the EU taxonomy. This is actually challenging in practice, but it could be transformational, and it should help reduce greenwashing. And once the green taxonomy is completed, the intent is to create a social taxonomy. And I think this will also be challenging because I think that if you look at how do we define human rights, for instance, this will be a challenging and complicated exercise. So the Sustainable Finance Disclosure Regulation is on the radar of all financial service providers in Europe because it kicks in for the first time in March of next year. So it's really just around the corner. And the Sustainable Finance Disclosure Regulation will provide investors and the market in Europe with sustainability-related information about those financial professionals and sustainable information about investment funds, banking products, insurance products, all financial products. The regulation focuses on how sustainability risks are integrated into the investment decision-making process and how those risks are actually expected to impact the return of financial products. This information will have to be made available in the legal documents for investment for financial products, so prospectuses, for instance, and on the website of the financial professionals active in Europe, so asset managers, banking, insurance companies, financial advisors, amongst others. Implementing these regulations is actually quite challenging and has been challenging for the European financial sector. Why? In the first instance, the level of granularity that the regulations require. There's also an increased scope of information and disclosure for financial companies to consider. And the second reason is the speed at which all of this is happening. On the other hand, the opportunity and the potential reward is enormous. And I think this is really a key opportunity for the European financial services industry to be seen as a key actor for helping deal with climate change and social issues and restoring some of the trust that was lost during the global financial crisis. So when speaking of the opportunity for the financial services community, in Europe we saw surging demand for green and social products in 2019. European investment funds devoted to sustainable investing pulled in a record 120 billion euro from clients in 2019. Assets managed by investment funds in Europe that integrate ESG criteria into their strategies grew by 56% in 2019 to nearly 670 billion euro, according to Morningstar. And more than 50 of the 360 funds that were launched that year had a climate-oriented mandate. And finally, the number of sustainable investment funds based in Europe rose to over 2,400. As a large European financial center and the second largest fund center in the world, Luxembourg is very well placed to meet financial services, help financial services companies and investors meet the goals of the new Green Deal, the Paris Climate Agreement, and the SDGs. Why? Because sustainable finance is not new for Luxembourg. The government is clear about its goal of further developing Luxembourg's role as an international platform for sustainable finance. And Luxembourg actually now ranks as the fourth greenest financial center globally, which reflects its being home to half the world's listed green bonds and more than a third of Europe's responsible investment funds. There are a number of initiatives that the government and private sector actors have launched, and in the interest of time, I'll just mention a couple. If you allow me, I'll start with the organization that I represent, LuxFLAG, as it's one of the longest standing initiatives created back in 2006 when public and private actors created the agency, again, to provide clarity to investors through labels, basically letting investors know that what they buy is what it says on the tin. LuxFLAG now labels over 300 investment products. We have from 10 jurisdictions, so it's international like all things Luxembourg. And we have our funds have assets under management of over 128 billion euro, 92% growth in the last 12 months. The Luxembourg Stock Exchange listed the first green bond to enter the market back in 2007. And in 2016 created the Luxembourg Green Exchange, or LGX, which actually today has a 50% market share of green, social, and sustainable bonds listed worldwide. The LGX recently listed a 17 billion euro social bond, which was the first European Commission issuance from the SURE program, set up as a response to COVID-19. And latest available statistics show that Luxembourg has a 31% share in European sustainable investment funds, and when you look at the assets in those funds, that share is 39%. So these achievements didn't happen overnight and reflect a commitment, a long-standing commitment to sustainable finance, in large part due to the continued focus, stability, and support of the Luxembourg government, and to the expert ecosystem that has developed in Luxembourg over the last 3 decades, comprised of firms and organizations doing business in and from Luxembourg. The ecosystem includes the full spectrum of financial services firms from around the world, including, of course, Canadian firms, as we've heard, and we will hear more of today. The breadth and depth of this ecosystem ranges from investment funds and management companies to private banking, as well as insurance and reinsurance companies, as well as the multitude of professional firms and companies providing services to the banking, fund, and insurance industries. And all of these actors are taking part in what the EU policymakers aim to do, to make finance sustainable finance. So in conclusion, we are clearly on a journey. The speed of the journey is fast, and there are some bumps in the road. The opportunity, however, is huge for the financial industry in Europe, in Canada, and around the world. And the opportunity for investors is also huge, not only to be able to invest in companies that will be around for the long haul, so companies that are sustainable themselves, but to invest in companies that will help with the biggest environmental, social, and governance and economic issues of today. So earning money and doing good. Thank you very much.
Thank you very much, Denise. The road might be still bumpy in the future, but Luxembourg is very much committed to financing a sustainable future. Now, let me turn to another topic, more general topic. What does the future of the European financial industry will look like? Philipp Renard, CEO of RBC Investor Services Bank, and Piers Roberts, Senior Vice President of Brookfield Asset Management, will discuss this topic during the panel session, The European Financial Services Landscape After Brexit, moderated by Joseph de Souza. Joseph de Souza is a KPMG audit partner supporting KPMG's alternative investments practice with a focus on real estate and private equity. He also leads the KPMG Canadian desk, where he supports Canadian entities expanding into the European Union via Luxembourg, as well as Luxembourg-based entities pursuing opportunities in Canada. Joseph is a qualified chartered accountant in Canada, in the UK, and in Luxembourg, and has 15 years experience in financial reporting under Luxembourg GAAP, IFRS, and US GAAP. Joseph is also a trainer at the House of Training in Luxembourg and contributes to various local industry working groups. Dear participants, we want this panel to be interactive. Therefore, during the session, Joseph will invite you to answer some multiple choice questions. You will find them by scrolling down your web page. In case you don't see them, please refresh the web page. Also, during the panel, you will have the opportunity to ask questions by using the question and answer form on this very page. The questions will be answered by the panelists at the end of the panel during the Q&A session. After a little introductory clip, we will see Joseph and the panel on stage.
Thank you, Philip, and thank you to the previous speakers for the enlightening discussion. I'm really pleased to be here, and I hope to shed some light on Luxembourg's role in the European financial services landscape post-Brexit. Now, before I get into that, and we hope to give you a little bit of a Canadian slant on the discussion, I first have a question for the audience. So maybe we can go to our first poll question already to gauge your level of familiarity with Luxembourg's corporate and regulatory offerings. So, question for the audience. To what extent are you already familiar with Luxembourg's corporate and regulatory offerings? So either you already use Luxembourg for fundraising and structuring, you're considering Luxembourg entities, perhaps you've done some research and you're not considering Luxembourg or Luxembourg entities, or maybe you have no familiarity with Luxembourg at all. So while our participants are doing that, I'd like to introduce my esteemed panelists. First, Philippe Renard from RBC Investor Services. So as CEO, Philippe chairs the RBC IS Bank Executive Committee and the Continental Europe and Offshore Operating Committee. Based in Luxembourg, he is also a member of the Board of Directors of RBC Investor Services Bank and a member of the Operating Committee of RBC Investor Services. Philippe works with the business, function, and country heads across Europe to advance the regional business and build a sustainable growth strategy in the region through RBCIS's high-quality, full-service provider approach. Welcome, Philippe. And Pierce Roberts from Brookfield Asset Management. So Pierce trained as a chartered accountant and chartered tax advisor in practice before moving in-house to JP Morgan Asset Management in 2008. After more than 6 years working on their European real estate funds, he moved to Brookfield and is head of tax for the European Real Estate Group. Brookfield Asset Management is a leading global alternative asset manager with over 515 billion assets in assets under management. Brookfield has more than a 120-year history of owning and operating assets with a focus on real estate, renewable power, infrastructure, and private equity. So welcome, Pierce.
Thank you.
So before we get into our topic, let's see if we have some responses from the audience on our poll question. So it looks like we have quite a number of participants, about 60%, who already use Luxembourg for fundraising and structuring. So very happy to see that. About 20% considering to use Luxembourg entities, and then almost 25% not familiar or not considering Luxembourg. So that's, I guess, good for us to understand the audience. We'll jump right into the discussion. And maybe I'll start with you, Philippe. So you've got a very large presence in Luxembourg. What does RBCIS do in Luxembourg? And how does that fit into and add value to your global strategy?
Thank you. And good afternoon, Europe, and good morning, Canada. So RBC Investor and Treasury Services is a premium provider of asset services, custody, payment, and treasury services to asset manager and financial institutions worldwide. Together with our sister company, IS Trust in Canada, we offer a unique blend of domestic and cross-border solution with more than 5,000 professionals in 15 markets. And we rank among the world's top 10 global custodian with almost 3 trillion USD asset under administration. So our presence in Luxembourg is back 30 years already, and we were there already serving clients at the inception of the takeoff of the asset management industry in Luxembourg. And really our positioning is to help clients distribute across Europe, being present in offshore market in Luxembourg, in Ireland, but as well in domestic market across Europe. Obviously, with as well more than 100-year presence in Canada, we understand quite well the Canadian market and the needs of the Canadian asset managers.
Thank you. And Pierce, you're based in London, but you're very familiar with Luxembourg. So for Brookfield, how does Luxembourg fit into your global strategy, and what type of operations do you perform in Luxembourg?
Well, good day to you all. Brookfield is an asset manager, and we really have Luxembourg in two key aspects of our business. One of those is fund structuring, and the other is within Brookfield itself. To take first the fund structures, I've been involved in real estate fund structuring for over 15 years, and Luxembourg is by far and away the most prevalent jurisdiction I've seen for structuring. And certainly for Brookfield, it's becoming an increasing area of our investment. It's critical for asset managers to be able to raise capital before we can deploy it. And historically, Brookfield has used a lot of Delaware, Bermuda, and Cayman partnerships for investors to come into. And that's perfectly standard and still popular. But that said, there is increasing focus on some of those jurisdictions from European investors. And they're certainly getting more, not necessarily cautious, but they would prefer to invest in a European sleeve, at the very least, for some of their investments. And therefore, for us, in order to ensure that we can raise capital, we need to consider what jurisdiction is appropriate. And when considering alternatives, Luxembourg was very much the obvious choice. It's a very familiar jurisdiction for investors. And it was certainly very simple for us to transfer our partnership agreement terms from the Delaware, the Bermuda, Cayman entities to a Luxembourg partnership. So very flexible, very commercial, and that helps with our operations and cost. And then once we've raised the capital in these Luxembourg vehicles, we have to deploy it. And again, Luxembourg makes a key part of our fund structures for doing that. So we have Luxembourg holding platforms, and we hold real estate, indeed, directly in Luxembourg vehicles. It's a flexible, stable, generally good regime to go into. And I think, again, the commerciality is the key part of this. So we often do joint ventures. Joint venture partners are very happy to invest in Luxembourg. It's a good legal regime. People are very comfortable. They're very familiar with it. And that also means that investments are very liquid. We can buy and sell things in Luxembourg entities, and it's very attractive. And in particular for lenders as well, they're very familiar with Luxembourg. And indeed, we've had situations where we borrowed in a Luxembourg entity to invest elsewhere, even in the EU, purely because the lenders are much more comfortable with Luxembourg as a jurisdiction. So overall, it's been a fundamental part of our fund structure. And that then leads on to our own Brookfield organization, where if we have these fund vehicles, we now have an AIFM in order to manage them. And in order to look after the holding platform as well, we have an office in Luxembourg where people carry on a number of functions, and that's been growing. And so really Luxembourg has been a critical part of our business for both raising money and then executing the deployment of that capital, having proper oversight. And that just means our Luxembourg platform within Brookfield itself has continued to grow.
Okay. And how long ago did you really make that push into Luxembourg for fund structuring and fundraising?
Well, I'd say for fund structure and raising, it's been a while, but it's been relatively light historically. So we started off with a few parallel Luxembourg sleeves for investors to come into. In terms of sort of doubling down with our own office, we launched the AIFM only recently, so I think it was this year, and that just shows that we think it's definitely going to continue to be the case that having these Luxembourg sleeves is going to be fundamental for raising European capital going forward. So I'd say it's been relatively recent, but it's definitely growing.
Okay. And Philippe, have you noticed a change in Luxembourg, especially amongst your client base over the last several years?
Well, we see a kind of acceleration at the back of the Brexit. So obviously Luxembourg was already successful in gathering asset and as fund domicile, thanks to the very stable and solid ecosystem, a mix of regulation that is stable yet flexible, but as well the critical mass of people who are professional for a number of years, who are multilingual and can use to regulation in many locations, right? So the trend was there and is there to stay, but we see an acceleration in a way at the back of the Brexit for the one who were solely operating from UK to gather capital across Europe, continental Europe, and to deploy this capital. Obviously, there are some concern that it won't be possible anymore. So these are opening up vehicle within a substance in Luxembourg to be able to deploy capital in Europe. But I believe this regulatory consideration is kind of an add-on on the other economical consideration that were articulated by peers previously. And that really leads to double-digit growth in alternative assets in Luxembourg for a number of years now.
Yeah. Well, I'm glad you mentioned Brexit, and I think peers being based in London, this is a very real consideration and a very real impact for you. So what has that meant for Brookfield, and can you maybe expand on how that's driven the business growth for Brookfield in Luxembourg?
Yes, absolutely. And I completely agree with what Philippe was saying. I mean, you asked me the question about our presence in Luxembourg and how recent it's been. And, I said that we recently opened an AFIM in Luxembourg. Now, clearly, when that decision was being taken, we were thinking about, well, where does it go? Do we have our fund vehicles and AFIM in the UK or somewhere else? And clearly Brexit rather guides one down the path of, if we want stability, if we want to know that we can market and have these vehicles regulated appropriately and run for the future, significant future, then really the UK isn't a viable option. And I strongly suspect that's why, going back to the Slido earlier, there are quite a few groups who are either very familiar with Luxembourg or considering it. So yes, for us, it's a question of, well, where does one go if the UK is not a possibility? And we had presence in Luxembourg already. We've been using it for some time, and it's very much an appropriate place to settle. And I think part of that, it goes back to the number of advisors and service providers that are out there. So we could have a third-party AFIM. We could get up and running really quickly with a third-party AFIM. And then, as we gain experience and we feel confident enough to take that in-house, we could do so, and we did so. And then it also helps with the regulatory uncertainty in that whilst there are a lot of people over in London doing a lot of work, like myself, because we do have an office in Luxembourg, because we have people there, should rules around delegation change or the like, and more services need to be provided out in Luxembourg rather than London, it will be a relatively simple, not painless, but a relatively simple process to actually expand that office, even if it's just moving people from London. So Brexit has really strongly formed the fund structuring, the AFIM side of things, and it's certainly I think about the holding platforms and our various property holding companies, which there are many, all incurring fees. They are more likely to be in Luxembourg because of that. It just makes sense to put things in the same place, aggregate that substance. So Brexit very definitely did have a push there, because I think it's fair to say that most companies prefer to simplify businesses and have as few extra offices and costs as possible. So really the fact there's been such a surge in Luxembourg businesses from asset managers just tells you how important Brexit was.
Right. Well, and I'd like to maybe ask Philippe then. So Piers, I think that was really, really interesting from a large asset manager. Philippe, you've got a broad range of clients, large and small. What are your clients seeing? What are you discussing with them, especially the smaller ones? And how does RBCIS or the larger Luxembourg asset management ecosystem support or facilitate other asset managers, navigate Brexit and the European landscape?
Yeah, thank you. So yeah, as you said, we have a broad range of clients, like the super mega big one and the tier 2 medium-sized one. And what we see is that there are a couple of dynamics at play. So the ones who are mid-sized and are quite successful in that domestic market and have a full range in that domestic market, and they see the competition, what they try to do is leverage their structure and not repeating and use the same asset manager, but expand to have more asset collection from outside of the domestic market. And their place of choice doing that is Luxembourg, thanks to the sophistication of the asset services business and the fact that the assets or the funds domiciled in Luxembourg can be distributed broadly across the world. So I believe for the UCITS, it's more than 70 countries it's distributed. And so we really help them to move from domestic to pan-regional in Europe and accessing a broad range of investors and markets, thanks to our very large TA connection and distribution network. So that's for the long strategy. In terms of alternative assets, as already articulated, I think it's a testimony, it's a legacy of the IFM regulation in Luxembourg. Then the ecosystem is quite successful and stable and flexible, and you see that it's quite easy and quick to gather capital and deploy this capital from a domicile in Luxembourg. And so it's optimized in many ways and allow you to really as well leverage your existing structure and existing asset managers. And I believe that's the secret or the recipe behind the success of the explosion, I would say, of the alternative assets domiciliation in Luxembourg. And so, yeah, Brexit is just kind of spicing up or adding to that, but it was already there, I would say.
And you know, the smaller or mid-sized asset managers, what's maybe their biggest challenge or you know, most important question in deciding, yes, let's move to Luxembourg, and you know, what does RBC help with? Is it more regulatory? I suppose tax wouldn't necessarily be the driver then for, you know, for that decision.
Yeah, tax is really one of the drivers for the biggest one, as all the structures are really tax optimized. I believe for the smaller one is the kind of risk-reward balance and avoiding the uncertainty. And to that extent, I believe coming to a country that is named to be very stable and known and have an history of managing or servicing assets is a guarantee of success in a way. And I would phrase someone who is not local, and just to relate a short story. I was having a lunch with the US ambassador a few months ago, and we, together with CEOs of North American Bank, we were chatting about, you know, the business, and the question came on how Luxembourg is perceived abroad, and the ambassador came with this answer: is that Lux enjoy a very stable political environment that is pragmatic and business oriented, and the country itself has a culture of entrepreneurship and pragmatism. And so if you want to start something new in Europe, start in Luxembourg, because that's where you would have the highest chance of success rather than anywhere else. And so that's, I believe, is really speaks for itself in terms of where you can start with the most chance of success with the minimal risks. And I would add that in terms of financial services, due to the regulation we already covered, the feature is stable yet flexible, and it's really as well the what fueled the success of fund industry and the asset gathering in Luxembourg.
Well, we certainly know that uncertainty is not good for investment, and I think that geopolitical stability, you know, and the pragmatic approach is something that I always hear from asset managers and financial services firms when they, you know, decide to move into Luxembourg. I think that's a great segue into our next poll question. And so for our audience, you know, I'm interested to hear, what do you see as the main geopolitical or regulatory issue you will deal with in 2021? You know, is it Brexit still? Would you be more impacted by CETA, which is the Comprehensive Economic and Trade Agreement, more informally known as the Canada-EU Free Trade Agreement? Would it be the new US administration? Would you still be dealing with COVID-19 and the fallout and impact? Or another geopolitical or regulatory issue that would be your main focus? So please have a look at the question, take some time to respond. And in the meantime, Philippe, you deal with a very large organization here in Luxembourg. At the same time, leading the Luxembourg Bank. I'm sure you have many dealings with your team and counterparts in Canada. Could you comment on maybe the ease of doing business between the two countries? I know it was alluded to and touched on earlier by one of the other speakers, but you know, how is the actual working relationship? What should someone expect when dealing between Canadian and Luxembourg teams?
Yeah, in short, a very happy relationship. So more on a personal note, I'm now 13 years with RBC, and I believe during the last 10 years I've been quarterly to Toronto. So I spent quite some time there. In addition, my eldest daughter graduated from McGill in Montreal. So I believe I kind of know a little about Canadian culture and how they interact. And I would consider the Canadian culture as a great culture. And sharing a lot of features with Europe. So in terms of entrepreneurship, being pragmatic, being efficient, but at the same time socially responsible and promoting diversity and inclusion. And so I believe it's talking to me, and I think we have a lot of commonality in values and culture. And I feel more attractive and closer to Canadian culture than to its North American big brother. Right. For RBC, taking RBC as a corporate instantiation of it, RBC values and vision is to help clients thrive and community prosper. And it really talks to my mind and my heart. And I'm talking to it because I think it's important as well for the line of business we are in the asset servicing business, where an operational outsourcing between an asset manager and an asset servicer is actually a strategic partnership that is there for the long run. And so when you consider that, you have to make sure you have a strategic alignment, but as well an alignment of culture and value at each level in the organization. So I believe, in short, it's kind of easy to do business with, and there are strong ties and good match between Canada and Luxembourg.
I'm really glad to hear that. Pierce, would you agree, as maybe a neutral observer sitting in the UK, would you agree with Philippe's assessment, or would you like to add anything onto that?
Well, I'm employed by a Canadian company, so I'm not sure I'm neutral. Keep the job and all that. No, I mean, what's been said is very true, and I think all of us in these professional service industries recognize the need to be able to work closely with colleagues, and that's with respect, but also, quite frankly, that entrepreneurial drive and being able to get things done. And I would say that's another reason why Luxembourg so frequently comes up as a place to go, because all of the people who are there have spent a lot of time working with the Americans, the Canadians, where there's certainly an expectation and a demand for a service which isn't just good quality but very timely. And I think clearly there is a certain viewpoint from the North American perspective which sort of washes over Britain and into Europe. And so yes, we all work very happily together, but we all know that we've got objectives to achieve, and we'll all work together to get there.
Let's see the responses to our second poll question, if we can. I'm interested to see. So 1/3 of you still expect to be dealing with COVID-19 in 2021, and I think that's well, it's telling, given where things are right now and the evolution of the second wave in Europe and North America. Brexit, 28%. The new U.S. administration, 28%. And clearly in Canada, Canadians are, quite exposed and affected by what happens south of the border and other. Not many people had mentioned, no one mentioned CETA, so very interesting. but COVID-19 clearly the first. Piers, Brookfield has made the move to Luxembourg, and I think you articulated very well, how that fits into and adds value to Brookfield. What are the opportunities or maybe challenges you see in Luxembourg for other Canadian financial service firms?
Well, I mean, really for me, Luxembourg is a gateway. And it's an established gateway for all the reasons that Philippe set out. It's very stable, it's very flexible, it's very familiar. And therefore, as he was saying, if you want to start something new, it's a great place to go. The depth and breadth of the service providers, those with experience, is pretty immense. Given there's so much familiarity from providers of finance, be it lenders, private capital, private equity. It's got a stable legal regime, it's stable politically. It's all very attractive, but it's also very innovative at the same time. And, certainly whether you want to go down an unregulated route and have maximum flexibility, or you want to have a regulated fund where the CSSF is rigorous, it's very well respected, but it's also pragmatic. You have the whole range there. And certainly from my role in doing tax and structuring deals where, you're trying to make sure things flow simply, easily, you don't have issues with lenders, with tax, whatever it may be. Luxembourg has continually innovated with new vehicles, new funds. From my perspective, in tax, the way the world is going, it's likely that one is ending more with either transparency to the investors, or we're going through regulated vehicles. And Luxembourg has repeatedly innovated, coming up with its partnership forms, coming up with certainly the real estate group, the RAFE, the SIF regime, all forms of regulation and optionality. That means if there's something you want to do, you can do it through Luxembourg. And if there's something you can't do, they'll try to make sure you can fairly shortly. So, it was touched on with the LGX and the green sustainability in an earlier presentation. So I think really the opportunity that Luxembourg affords is the flexibility and the reputation and the skills and expertise. That means if you want to do something, you can do it in Luxembourg.
Right. Philippe, maybe just quickly, if you'd like to add anything on that, what do your clients say is the main opportunity or challenge, or what's your selling point to, financial service firms considering Luxembourg?
Yeah, I think Piers really articulated well the opportunities in regards to alternative assets, where I concur saying it's the place to be for asset gathering, but as well as asset deployment. I would like to complement that by another opportunity. Maybe it's the UCITS distribution in Canada. So for our Canadian colleagues around the call, UCITS stands for Undertaking into Collective Investment into Transferable Securities. So UCITS in short. So it's mutual funds. But it's as well a brand that is broadly recognized worldwide and distributed. And I think the distribution in Canada can be done to institutional investors and high net worth individuals without much repackaging. So it's kind of ready to be distributed. And actually it's an opportunity because it gives access to a full range of vehicles and funds with different risk profile and expected return profile, and could be a nice complement to any long liquid portfolio, giving access as well to world-class asset managers. And so in a very competitive environment in Canada and pressure on fees, it can be as well a nice diversification looking further than the usual USA investment. Mm-hmm. So to consider as well, I believe.
Thanks. I think that approximately wraps up our panel, but we're happy to take questions from the audience. Are there any questions that have come in?
Yes, absolutely. Could the panel describe the effects on Brexit on a global, European and a Luxembourg perspective in terms of the financial centres? What opportunities are there for Luxembourg? This was a question from David Pike.
Okay. Maybe Philippe, would you like to start on that? I think that kind of falls within the scope of...
Yeah, difficult question. I don't have any crystal ball, so it will really depend on how what negotiation will and agreement we will have. And even if we don't have an agreement, it can be going into different direction. UK could be, I don't know, create an offshore center with very attractive tax optimization that will still continue to be a magnet for capital, capital gathering. We don't know. The fact is, I believe Europe will continue on its trajectory, and Luxembourg specifically. The dimension of the fund services in Luxembourg and the critical mass it reached cannot be changed and cannot be moved elsewhere. So I believe it's good to stay, and I'm quite confident on the future of Luxembourg post-Brexit.
Yeah, I think I would agree, at least as it relates to Luxembourg. So I don't want to speak for, on a global scale, but, I think the business case for Luxembourg was already there before Brexit. We saw that some of the limited partnerships and other structures that made alternative investments much more attractive to be structured through Luxembourg, already started the momentum, and Brexit just accelerated it. So I think for Luxembourg, you're absolutely correct that it will continue to be a dominant financial center in Europe. How Brexit, first of all, how the negotiations evolve, and then what further impacts that has or will have is something that's difficult to predict at this time. Any other questions?
Yes, we have another question from an anonymous person. What will the new US presidency mean for financial services in Canada? Well,
I'm not really sure that anyone can answer that. First, they need to confirm, the new U.S. president. But I think the Canadian market tends to be a very strong domestic market, and so I don't see there being a huge change. Hopefully, again, less uncertainty should mean more investment. So hopefully more cross-border investment and collaboration. But I think it's a bit earlier, at least out of my the area of expertise. Piers or Philippe, would you like to add or comment on that?
Absolutely outside my area of expertise as well. But as you say, certainty and stability always helps.
Yeah.
I'm sorry, cannot comment. I need to consult the economist in-house.
Yeah. Any other questions from our audience? Otherwise,
yes, one final question. What are your organizations doing in the field of ESG?
So maybe I'll give both panelists the opportunity to respond. Piers, perhaps first.
Yeah, it's definitely a live topic, and I think it becomes more so with COVID and the impact there. It's not something I'm particularly involved in beyond, of course, the fact that tax forms generally part of ESG in of itself, and making sure that we're, always on the right side of the line. We're always doing the right thing. The real estate industry has been involved in ESG in some ways, for a very long time. You have the environmental standards, BREEAM leads, etc. And there's also a lot of efficiency is good for the bottom line as well. So it's not an area I'm particularly involved in at Brookfield, but it's definitely an area were involved in, and I believe it was in the press that we recruited Mark Carney to be involved in our ESG. So clearly it's an area that we're taking very seriously.
Mm-hmm. And Philippe?
So we are not driving this discussion. We are ready to support our client going into that direction. We see a big drive and appetite from client to go there. So I believe we are ready to support and report on ESG investment and compliance or restriction of compliance investment policies and so on and so forth. As articulated by Denise Voss previously, I think the prerequisite is to have a shared taxonomy on the market, so that we can name and identify and do the sort out between the ESG investment from the other in full confidence. And so as part of the, I would say, market infrastructure, we are ready to support and take that into our referential and report alongside.
Yeah. And I'm proud to share, and this was released just recently, that our global chairman, Bill Thomas, has announced KPMG's pledge to be carbon neutral. I think it's over the next 20 years. The date could be wrong, but the pledge to be carbon neutral is there. And otherwise, on a daily basis, KPMG supports our clients and the wider community in first understanding the requirements. As Denise said, that clarity is needed, that global taxonomy. So understanding the requirements and also reporting and providing assurance to the market that when companies publish certain results, there's some credibility behind that, and they can rely on the data. So we are very active in that space as well, and we certainly see that as a big request from investors, but also companies for that support. I think that clarity and support is needed. So on that note, I'd like to thank the audience and the panelists for a very interactive and informative discussion, and I wish you a continuation. Back to you, Philippe.
Thank you very much, Joseph. Thank you, Philippe and Piers, for this interesting insights where you believe the industry is heading to. And this brings us to our final speaker, who will respond to the questions: why could you be interested in Luxembourg's fintech ecosystem? No one better to answer this question than Nasir Zubairi, CEO of the Luxembourg House of Financial Technology, the LHoFT, a public-private sector initiative to drive fintech innovation in Luxembourg. Nasir has worked in financial services for 22 years, 13 of them in capital markets. Immersed in the fintech and startup environment in 2011, today Nasir sits in the IMF's high-level advisory group on finance and technology and OECD's blockchain expert policy advisory board. As an entrepreneur, Nasir has built multiple fintech businesses. He has advised the boards of leading financial institutions, of central banks and governments. He was included in the top 40 innovators shaping the future of financial services by the Wall Street Journal in 2014. Nasir has a Bachelor of Science from the London School of Economics and is a Sloan Fellow from London Business School. Nasir, after a short introductory clip, the floor will be yours.
Hello, everyone. I hope you can see me. Thank you very much, Philip, for that introduction. I'm feeling slightly shy and embarrassed with such gushing, lovely words. I'm here to talk a little bit about Luxembourg's fintech ecosystem and why Luxembourg is a fantastic place for fintech in the evolving world of digitalization. Most of my job and what I was going to speak about has actually already been done. I think you've heard from many of the speakers thus far the key reasons as to why business and also financial services and specifically fintech is booming in Luxembourg. Our ecosystem, as you can see from this slide, has grown immensely over the past 4 years, with a key focus within the sectors of RegTech, payments, asset management, and technologies such as blockchain, AI, and big data, to service in large part and work with the fantastic financial institutions that already exist in Luxembourg. If you could move to slide 2, please. I don't really want to dwell too much about this. I think you've heard a lot of this already from many of the other presenters, but Luxembourg now, as a leading financial services center within the European Union, provides a plethora of potential business partners, service providers, and customers for fintech firms from all over the world to come and do business within this very small and tight-knit ecosystem. I personally have been now in Luxembourg for around 5 years. Genuinely amazed at the proactive attitude of people wanting to get things done here, of the engagement from the financial services community, and how easy it is to connect with and do business with all of them. If you could move to slide 3. And here are some of the key reasons. As I said, most of this has already been said by many of the other speakers this evening. Luxembourg is a core financial services center, but an international services center. Luxembourg has over 50% of the population are foreigners within Luxembourg City itself, where most of the financial services institutions are based, is around 70% foreigners. People coming from nearly 120 different countries around the world. This leads to an incredibly diverse and international culture, and one which is accepting of everyone from wherever you are, and critically in that regard, speaking all the languages that you need to speak when you come here. As you can tell, I am not a Luxembourger, I am British. My French is not particularly strong, I wish it was better. My German is almost non-existent. I have tried to improve them, but Luxembourg doesn't that easy for one particular reason, is that I find that everyone switches to English when they're having a chat with me. And that goes right from the CEOs, from the executives, from the managers of institutions in Luxembourg, through to going to the grocery stores on the weekend. And that makes for a very open and inviting environment. You don't feel alienated here. You feel as though you can come in and land on the ground and get running as quickly as possible. The environment is very conducive to fintech firms wanting to access an ecosystem. With a country that is 600,000 people, you bump into the CEOs and executives of financial institutions while at the grocery store on the weekend. This community, most people know nearly everyone. And as a result, anecdotally, the evidence shows that the time to market, or the sales cycle more specifically, for fintech firms with worthy solutions that financial institutions are looking for, are able to get those solutions implemented much faster and get to revenue quicker than in any other jurisdiction. Slide 4, please. And we as the LHoFT and our role in this ecosystem here, we were set up as a collaboration between the government and the private sector. I have a board of 19 that sit and are very proactive in engaging with ourselves and driving the digitalization of Luxembourg's financial services sector. If we turn to the next slide, please. Here are an example of the private sector firms that we engage with and work with, but critically also the Minister of Finance, Pierre Gramegna, is our CEO, is our very proactive chairman. And it is a real sense of engagement between and collaboration between both the public and the private sector to try and make things happen. Something unique that I haven't personally seen anywhere else in the world, and I have lived and worked in 9 countries myself across North America, Europe, and Asia. Next slide, please. What do we engage in? We provide support to fintech firms looking to find their feet in Luxembourg. We want to make this as welcoming an environment as possible. We help with the administration processes. We know people that can assist in setting up companies, in helping find the right talent to fill your company with. And we have obviously a facility, an incubator, where we house now currently 78 companies, but we deal with firms from all over the world through our vast array of partnerships. Next slide, please. As such, we also work with the traditional finance sector to create a real sense of community. And that community really does come together. Not the easiest thing during these times with COVID-19, but the community as a whole is generally still continuing to be very active, be it digitally, but hopefully when times improve and we see a light at the end of the tunnel with COVID-19, we'll be back to hosting our live events where, you know, we have CEOs, chairmen of banks, people from government, from the regulator, from legal firms, from advisory firms, from venture capital firms, all coming in under one roof into the LHoFT to talk, to network, and to make things happen. Next slide, please. And the ecosystem in Luxembourg is really geared towards trying to facilitate business, to facilitate startups to come and feel comfortable and get up and running in the shortest amount of time and in the easiest way possible. Aside from us, with our focus on fintech, we have a vast array of different initiatives, be it mostly public sector, as well as education institutes, funding resources, and various forms of support to really make life as easy as possible for the large-scale international contingent of firms that do seem attracted by Luxembourg as their European headquarters. Next slide, please. We ourselves, as I mentioned, partner internationally with a variety of different hubs, with initiatives from around the world, across Europe, in Asia, in the US, in order to facilitate business with the goal of trying to enhance digitalization across the financial services industry. We work very closely with a number of these hubs. In particular, we have spearheaded the setup of a pan-European network called the Talent Route, to really focus on enabling opportunities for fintech firms across the European Union, and are looking to expand that connectivity also to include firms from Asia, from the US, to really bring together collaboration and an enabling business environment for digital companies. Next slide, please. And obviously, in this world of C19, we've switched a lot of our efforts to be online, and we remain engaged with that community with an increasingly international audience, providing masterclasses, education programs, thought leadership through digital forms. We have set up a studio within our facility and allow access to that studio to all of our fintech firms, because we're there to make business easy and help these firms to engage in the most effective way possible. We hope you can join us. All of our events are up and available on our website. It'll give you a flavor to somewhat as to what our community really is like in its vibrancy within Luxembourg. Final slide, I think. That's really what I have to say. I hope to hear more from you. If any of you are interested in engaging with the Luxembourg financial services community as a fintech firm with a digital solution, do not hesitate to get in contact with us, get in contact with Luxembourg for Finance. We're there to help. We want to make good business for everyone. Thank you very much for listening.
Thank you very much, Nasir, for having presented the Luxembourg fintech ecosystem and the impressive work you do. So if anyone has still some questions, you can contact Nasir and his team anytime. And they are basically in Luxembourg also to connect the dots, and they do it very well. Thank you very much, Nasir. And this brings us to an end of this session. Besides Nasir, I, of course, would like to thank the other speakers, Shauneen Bruder, for her warm welcome and for explaining to us the relations Luxembourgs and Canadians have for a long time now. I would like to thank Denise Voss for presenting the many challenges, but also the tremendous opportunities that sustainable finance can provide. A big thank you to Joseph de Souza, Philippe Renard and Piers Roberts for introducing us to the current trends in the European financial industry. And last but not least, thank you very much for your interest. We very much hope to see you physically next year, and we would really hope that this will happen. And I really thank you for your attention, and I wish you a nice day. And please, wherever you are, stay safe. Goodbye.